Greetings, members, one and all of the Salivation Nation, all the money in the world. Let's explore! This is an older infographic that has been updated, I think, maybe once, and it is from demonocracy.info. In fact, some of these graphics may look familiar to you. My channel and others throughout the history of our time here on YouTube have used some of these graphics in our presentations for quite some time. But I don't think we've actually ever just took time to examine all the money that has been printed and utilized in the whole world and what the world is worth in terms of the money. Now, obviously, a lot of this is dated, but it is something that I think is quite profound and gives you an idea of what things and entities and people are worth. So let's take a look at this, and then we'll get to the very bottom of this infographic that talks about Exeter's pyramid, which is something that many people have referred to and talked about. But we're going to look at it from another perspective here, a perspective that gives you an idea about the importance of the money that has survived for thousands of years, but not only that, but in terms of the safest assets above and beyond gold and silver, because I do believe there are some still around today, and maybe what's missing from that inverted pyramid. So let's take a look at this here, and we will give it an idea of what our money is worth and how it's changed over time, including since this infographic was created. So it all starts out with a pretty big bill. In fact, it's the largest bill that's in circulation today in the United States. That's the $100 bill, and it is the most counterfeited money denomination in the world. In fact, some say that North Korea probably creates the best counterfeits of the $100 bill. At least there was a time when that was the case. Perhaps the Secret Service has cracked down and maybe found ways to stop that. Of course, this was created before the new $100 bills were printed. But it is something. It is a widely used storage of value in the world of drug dealers. And maybe this time now it is being beaten only by hackers and maybe even some other crime syndicates with cryptocurrencies. We hear about nowadays we find what is referred to as ransomware, and people want to be paid in Bitcoin and cryptocurrencies. More on that below. So then we take the next logical step, and that's a stack of $10,000 bills. Enough for a great vacation or to buy a used car, approximately 1 year of work for the average human on Earth. Now, this is dated. This is from 2014, so I'd be very curious to see what it is now with all the liquidity and inflation we've seen since then. But more than likely, probably that number may be up by 50% to 15,000, but that's not a lot of money to earn per year on an average for a human on the planet. And then we go to the next largest, which is a pretty big jump. For any of us, $100 million would be a lot of money. And you can see compared to a person standing up there that it is still shorter than a person, even as it sits on a pallet. Plenty to go around for everyone, fits nicely in a military standard size pallet. And then $1 million is the cash square on the floor. So there you go. So there's 100 million there, and there is $1 million right there on the floor there. So that's pretty compact, I would say, in $100 bills, to think about that. And then we go next to $1 billion, which is astronomical. $1 billion looks like there's 10 pallets of $100 bills stacked up there that we see. And then we obviously we have the reference there again to the individual standing. And we see the stack of $1 million there on the floor and $10,000 as well. Then we have $1 trillion. Now, this is a number that we are hearing about more and more, being bantered about, and actually it has now been used as stimulus for the COVID response, and it has now been talked about here under the Biden administration, about $6.8 trillion proposed spending if they had their way in Congress right now. On infrastructure and other projects there. $1 trillion. And this is the reality of $1 trillion. The square of pallets to the right is $10 billion. 100 times that, and you have the tower of 1 trillion that is 465 feet tall. And so we saw the top of this tower at the very top of this infographic. We're going to scroll back up again to take a look at that there. But imagine that. Amazing to think. There's $2 billion on this truck right here. You can see how small and tiny that is. And then when you have, again, there's the individual there for another example of scale and size. There is the top of this $1 trillion. A huge leap indeed. Wow. Fascinating. So if we look at this now compared to Bitcoin's market cap in January of 2017, I wouldn't even know where to begin where it is now. So that's January 2017. That's $14 billion in the market cap for Bitcoin. It is much higher than that now, for sure, as people are finding cryptocurrencies decentralized, and that gives you an idea of the value of cryptocurrencies here. And Bitcoin has become the fastest appreciating asset in human history. So if you're looking at this dated from 2017, let's look back in 2013 in November. Each Bitcoin was worth over $1,000. In contrast, in 2010, when the first Bitcoin transaction recorded was for 2 pizzas at a price of 10,000 Bitcoins. Bitcoin's value has been extremely volatile since its inception. 5% price fluctuations are very common, sometimes multiples a day. But we saw what happened since then. A lot has happened. Bitcoin got over $60,000. Now it's pulled back quite dramatically. Almost half of that's been gone at a particular time, but it's kind of bouncing around. I don't even know what it is as of the recording of this video, but it is interesting to see and fascinating. But many people think that bubble is about to burst for the Bitcoin and maybe the allure of cryptocurrencies in general. What are cryptocurrencies for? It's meant to be a secure, decentralized currency, in the word, and that is what cryptocurrency's definition is. It's not really meant to be an investment vehicle, but it certainly hasn't turned into that. And for sure, then you have these altcoins like Dogecoin and others. I'm very, very curious to see this updated to include the entire cryptocurrency market. Now, let's look at the world's richest people, at least as of the time of the creation of this infographic. This is from the end of December 2014. And we have now, notice whose name is not here, and that is Jeff Bezos. And, it'd be very interesting to see what those numbers are, and for these guys as well, too. But this gives you an idea of just how rich some of the people are and how that can shift and change over time. So you can see Carlos Slim at 72.9 billion, Bill Gates 79.2, and Warren Buffett 66.7 billion. Wow, pretty amazing. And so that's a lot of wealth concentrated in those individuals for sure. Now, the world's biggest companies, again, outdated, but you can imagine these numbers are going to be bigger and shift around to some cases. The value is shown as their stock's market capitalization, which is calculated as share price multiplied by total number of shares. This number is actually abstract estimation of value and fluctuates greatly with bad or good news published on a company. It is not uncommon for a 10% move in stock prices and market cap. This means these towers of cash can sometimes fluctuate in height of 5 to 10 floors per day. Still, the market cap is a rough sense of their size and perceived value. So look at that. Pretty amazing to see with these companies, Apple being on top there, and then you have Google, and again we can see how these can shift and move, but fascinating to see. Now we're getting into an area that we are familiar and we can appreciate: all the investment gold and silver in the world. That is an important distinction. This is investment gold and silver, and there is, we know and we've seen, and I've covered on this channel a long time ago. I've not done any videos on them since, because a lot of the information really hasn't been updated since they were done. And some of them date back to 2012 and 2013, so they're very much outdated. But this has a short summary of the relatively small amount of gold and silver available in the world for investment purposes, which means stacking and holding, and and I guess you would say probably the derivatives of their exchange traded products. But nonetheless, the approximate value of all the investment gold in the world is $2.5 trillion at $40 a gram, or $1,250 per ounce. Of course, now, when you take that into account, those are prices we'd love to see again, for sure. But the price has jumped up to, as of the recording of this video, about $1,900 an ounce. There is significantly more silver in the world than gold, but because silver is multiples cheaper than gold, less than $20 per ounce in 2017. Okay, so this is updated to 2017. A lot of silver has gotten lost throughout time. Silver is also used in industrial production. The amount of investment silver available to the public is surprisingly small amount. World governments do not hold any significant silver reserves, unlike gold, and that is a distinction. And so this is why, and people point to this when you look at that. Here's the cash value of investment gold, $2.5 trillion. And now that's well over 3 trillion, if not more than that now, considering that they've mined more gold since then. And then you look at it compared to the Statue of Liberty. Look at these blocks of investment gold, 60,000 tons, compared to all the gold in the world, which is substantially more, and definitely a lot more silver in the world than the 31,700 tons of silver, which is almost half that of gold for investment. But when you take into account, and this is why I say by any measure there is more silver than there is gold in the world, because this is taking into account all of the reserves that are held in the central banks around the world. They can't get that gold, and gold is untouchable. And so silver, there really isn't any of that around the world. Any central bank reserves of silver. And it's understandable why that's the case, because it takes up a lot of room. It's almost really not worth having in the stockpiles. There is strategic reasons for silver, but some of that can be still sourced through normal distribution channels and the like. And I'm sure there's probably resources to get it if needed for strategic reasons like defense and the like. But there you have it. But people probably point to this graphic or these data to make a point that there's less silver in the world. But as explained very clearly here above, this is why that appears smaller. And but nonetheless, very interesting indeed. Fascinating infographic. for sure. And then we have this portion of the infographic, which is the world money supply. And this is where we get into really understanding all of the money in the world. $28 trillion in base money, and then 50 trillion in bank money. And this is a interesting distinction here, but look at that. Pretty amazing. Of course, that's much more now. This is how much money is on the planet. It's not all in physical cash, though, as shown above. Most of it is digital. That's the important thing to understand, is that a lot of it has just been digitized. It's very easy to do. And notice, by the way, that they are calling cash money. Cash money. That's right, which kind of bolsters my definition of these dollar bills that we use every day as stores of value. Now, it's a decreasing store of value, but it is a store of value nonetheless, and people have faith in it. And so demonocracy here is rightfully calling physical cash and even digital cash as money. So base money consists of money held by banks, received from their central banks. When banks sold government or corporate bonds to their central banks, the money is available for lending to the private sector. Money stored in bank vaults, physical cash, and cash in people's hands. This money is not available all at the ATM. So in other words, you just can't go to the ATM and get it out. Bank money consists of money stored in banks by corporations and people, available for withdrawal at any time. Bank money is also lent out by banks to people and businesses. Banks have a minimum reserve requirement, usually 10%, that they must keep on hand. If everyone decided to go to the ATM and pull everything, there would be a run on the bank, and that is a real understandable fear. And I think the reason why that is something that people should be concerned about is look what happened last March. In the marketplace, we saw a run to the safety of cash money. That's right, people ran to the safety of cash. In fact, you've heard talk about even some folks that are in the precious metal sector, people like Rick Rule, saying that people should have cash on hand, and I certainly agree with that. And they do that because cash is definitely money. So there you go, you have it. So you can see that the base money supply and the bank money supply, there's a lot more of that as bank money there. So very interesting indeed. Now, this is the $58 trillion, which is the value of all the government bonds, which essentially is debt in the world. $58 trillion. Look at that compared to the Federal Reserve bank building, a normal middle-class home, and the Statue of Liberty there, and the Big Ben Tower there. Very interesting indeed. The world's citizens pay interest on this much money because of debts created by their country governments. Government bond debt is considered an asset class because bonds, taxpayers, pay interest on the borrowed money. The lender gets a certificate, the bond a promise to pay the money back plus interest in return. Usually government bonds are considered safe investments with little risk of non-payment because governments can write new laws, increase and create involuntary taxes to take the people's money by force, which is, some of us consider legalized theft or robbery. Another option of repayments that is not so favorable to investor lenders is to have the Federal Reserve print new money. This devalues the purchasing power of money through inflation, and the investors get back less than they put in. This is usually the method of choice of governments. And we're seeing that more and more. We are now essentially in quantitative easing to infinity, although there's been talk about the Fed scaling back that quantitative easing. So why so much government debt? Well, because politicians overpromise to the citizens what they cannot deliver. They do so to win the election. Once politicians win, they borrow money to pay for their promises in order to keep their promises. Often they borrow to enrich themselves and their crony partners in crime. That is a bipartisan statement. It's a bipartisan criticism. We can blame both sides. They both do it for their constituencies, and the thing is we fall for it. And I know there's really only two choices, Republican and Democrat, but sooner or later people need to be held accountable. And I think Republicans need to be held just as much accountable as the Democrats with this deficit spending. Now, all the stocks and corporate bonds in the world, this is where it gets extremely astronomical here. Almost double the value of all the government bonds is the stocks and corporate bonds in the world. Corporate bonds are similar to government bonds, but more risky. Many big companies carry far less risk than lending banks to individuals. This fact lowers risk and drives down lending interest rates. Big corporations can borrow money fairly cheap compared to private individuals. Sometimes companies borrow money to buy back their stock and push stock value up by so enriching the investors where financially gutting the company. Stocks can fluctuate greatly in price because their value is more abstract. The value is determined by price to earnings ratio and anticipated stock dividend payments. Look at that. It's just unfathomable to think about this wall of cash here that represents the value of all the stocks in the world and bonds, corporate bonds. Then we can take that and double that. $290 trillion value of all private business and real estate in the world. Man, look at this. Now, this is something that I think is something a little bit more, has meat to it. This is if you were to want to buy the entire world, this is how much money you would need. $100 trillion for real estate, which has actually gone way up since then. $100 trillion for registered private businesses. $10 trillion for extra legal entities. This specific pile of money is enabled by private ownership and private enterprise through capitalism. Democratic capitalism is considered to be the worst economic system. Before taking a look at the alternatives, democratic capitalism was promoted by the founding fathers of the USA. Some call the founders heroes. Meanwhile, some will call them slave owners who did not want to pay taxes to the UK. Choice is yours. Well, the thing is that I don't know that I would say that's the worst economic system. I believe in capitalism and free enterprise. But let's see what they say here. Corporate capitalism is considered to be the dominant system in the United States currently. And so maybe, I don't know. I think the free market principles tend to be the best and most successful. You give people free choices on how to earn and how to spend their own money. That's going to be a recipe for success. Now, communist governments would seize control of all of this money, business and real estate, on the basis that the government knows better than you where to invest your savings. Because it's interesting that they say that, but yet they they criticize and call the democratic capitalism the worst economic system in the world. Let's see here. And the government knows better where to invest your savings, and all the government would run all business and own all real estate. And so, this is the old saying, the road to hell is always paved with good intentions. A fool who thinks he knows is much more dangerous than a fool that knows he knows nothing. Yes, well, and I one thing I do, certainly I would trust the money and ownership of private entities more to the people than to a centralized system such as governments. So I'm not sure exactly what the message of this particular text here is by Demonocracy, but almost sounds like the name of the website makes you think that they're almost against democracy or democratic principles, when pure democracy certainly is, by its very nature, mob rule. We want to be against that. So, but a representative republic, as far as the system of government, is really the best way. But as far as limited government and roles for the founders, I would call our founders heroes for sure. All right. Now, let's look at derivatives. This is where it gets really insane. $1 quadrillion, which is the value of all the derivatives in the world. It's a total notional value of all the derivatives in the world, which is like casino-style bets, essentially, made by banks. And this is a very shifty and a best guess. My guess now is probably worth a lot more. There's probably more in derivatives these days. They're imaginary but very real, like casino-style bets in a contract form made by banks, overseen by really no one. And that's just it. Same thing with ETFs in the precious metal sectors, like SLV. There's way more paper contracts than there are the silver to back it. And pretty much it's like that with every commodity. Pick something of value, make bets on the future value of something, add contract, and you have a derivative. Banks make massive profits on derivatives, and when the bubble bursts, chances are the taxpayer will end up with a bill. This visualizes the total coverage for derivatives notional, similar to insurance companies' total coverage for cars. Does not mean all insurance and all cars will be paid out simultaneously. Sometimes banks make self-canceling derivative contracts, and the kind of talks you can kind of see there what it's saying, but no one really can really track who owes what to whom in derivatives. It's a vast, confusing mess, with emphasis on confusing. That's why I've never gotten into the silver futures market and ETFs and all these contracts and short selling, long. I mean, it's crazy. That's why I'm about the physical when it comes to precious metals and really any entity. I don't think I would want to buy based off of a future or options trading and that type of thing. It's just it's a mess, and that's why I believe, because of the confusion of these derivatives in the precious metals market, is why people feel they can come to a conclusion of massive price suppression of precious metals, because they are working off of the confusion of the derivatives markets. But anyways, some bank or entity would own a bankrupt bank's stocks and assets and also face bankruptcy. This would cause a loss of confidence in banks, and everyone would start pulling their money to safeguard it, causing a cascading effect of bank insolvency. So this is how things could collapse very quickly from the derivative market, essentially imploding in and of itself. And that could happen. And, you know, we talked about this here, where former Fed chairwoman, who's now the Secretary of the Treasury, Janet Yellen, suddenly raising interest rates to 5% would very likely implode the derivative system. So, you know, that's just it. The Federal Reserve has got to be very, very careful on how they handle this because of this sea of madness known as derivatives. The entire financial world hangs by a thin string, ready to be destroyed like in a domino effect due to unforeseen crisis that causes value of investments to fall, and derivative exacerbates this effect. I will say that statement is probably dated, because nowadays, and even more so, but even probably back then, there was probably a lot of triggers and switches that can be pulled, and levers and stop gaps that would prevent it in some manner or form. But amazing to see this wall, huge, tall wall of cash that represents the derivatives markets. So you think about $1 quadrillion, it's 1,000 trillions, or 1 million billions, or 1 billion millions. That's just amazing to think about the derivative exposure cash wall, and it's just insane to think about just the sheer size and scope. Now we get down here to Exeter's pyramid. The liquidity pyramid, as it's also known as, was created for visualizing the organization of asset classes in terms of risk and size. The liquidity pyramid was created during the time of the United States when each dollar was backed by gold. Gold forms a small base of the most reliable value and asset classes on the progressively higher levels are more risky. The larger size of asset classes at higher levels is representative of the higher total worldwide national value of those assets. While Exeter's original pyramid placed third world debt at the top, today derivatives hold this dubious honor. Hey man, I agree with that completely. It's insanity. As financial risk increases, money tends to move from the more risky assets, derivatives, to the least risky assets, to physical cash, and then gold. Nothing is without risk, but risk is relative. The issue is that there is very little physical cash and even less gold compared to the more risky assets. This makes for a crowded trade in times of high risk, when everyone wants to jump into cash and gold, pushing up the price. And so there we see the risk. In fact, we are going to see if we can blow this up here and see this thing at a higher scale. And we'll have to pan and zoom around here, but you can see the liquidity pyramid here. $1 quadrillion in derivatives here as in the top of that pyramid here, compared to all this wall of cash, which we'll look at the very bottom, but we saw earlier there. I can't zoom in and out of this image here, but the non-monetary commodities, $300 trillion, private businesses, real estate are kind of what that makes up. We looked at that portion for sure. So even that is just under less. So people talk about real estate being a safe asset class, but according to this, it is pretty risky. But I tell you what, it's really been growing lately in spite of some of these things. But you know, the real estate market did crash in 2007, 2008. So there was that, and people think that much the same is happening now as was back then. So I think that's why that's near the top. Then we have corporate and municipal bonds, which is that $116.4 trillion, which represents securitized debt and listed stocks. And so you can see the pyramid is getting smaller here, this inverted pyramid here that we have. Government bonds, $56.7 trillion. So yes, getting smaller now. That is around the middle there, we can see for government bonds. It's amazing that one would think that government bonds would be this considered a stable class, you know. Bank money, we talked about cash. Bank money there, $50 trillion there in the amount of bank money. And so that is something that that's money that you can take out, cash that you can actually get at the ATM. Then you have the base money supply, and known as M1 there, the M1 money supply. So there you have it. It's interesting to see $28.8 trillion is considered the safest. And look at that. I mean, cash is where people run to, and there's people that go to the bottom of the pyramid, which is gold, which is obviously much more rare and has a longer history of being the store of wealth and value, known as God's money, gold. It is pretty amazing. And really, that is what these central banks, we know that now the central bank of central bankers, the Bank of International Settlements, has labeled and regarded gold as a tier 1 asset. And we've talked about the plus and minuses of that, but by and large, essentially, the positive to that is for those of us who buy gold and hold gold, to have it and to hold it as it transitions to the new system means that, hey, you have become empowered in one form or another with this gold that is in your possession. So therefore, that is the tip of the spear, the tip of the pyramid. And you know, and again, as was stated in the description here, there is still risk in base money supply and gold. Gold has been known to fluctuate as well. And by the way, I would also probably put silver in between gold and cash. I would say silver is just above gold in the Exeter's pyramid here, because I believe it serves as a store of value. And actually, silver has been more widely used as money throughout history than any other metal, save for copper and bronze. Copper is actually a metal that is utilized more as money than any other metal in world history. That's right, in world history, copper. But you won't see that in the pyramid because copper is essentially relegated as a commodity, and it's somewhere up around some of these other asset classes. But look at all this cash, and this is another aspect that people don't think about when you look at it from this direction here. We've got the Exeter's pyramid in terms of the actual value, in terms of the piles of cash, where gold is sitting here at the tip. And of course, again, silver's not there. I believe it should be in there, and I would put it between base money and gold. And so there is less risk in these. All this cash, look at that. And we're looking at the base of these stacks of cash, government bonds, treasury, all of these things are through here. Corporate and municipal bonds, non-monetary commodities. Then we got the derivatives, the big D word, and everything that goes off the page. So nonetheless, there it is. Very interesting indeed. So there you have it. A pretty thorough look. Let me know what your thoughts are in the comment section below about all the money in the world. Fascinating indeed to see here. Exeter's pyramid and how this plays out. So I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.